Good day, grade 11s. This is task 10.5 and 10.6 explained. You are required to complete 10.7 and 10.8 for week 11, which will be discussed later. So I'm going to be going through the two tasks given for week 10. So we have if you cannot see clearly, please refer to your actual textbook. And for task 10.5, the following information was extracted from the accounting records of Tulani stores. The information below refers to the month of 28th of Feb 20.8. So we've got cash sales, rent income, salaries, advertising, depreciation, cash purchases of trading stock, loss on sale of equipment, bond repayment, sundry and other expenses, and cash drawings. Then we have additional information. Goods are sold for cash at a markup of 50% on cost, and this will be maintained during the budget period. Stock purchases are for cash only. So that is just for your own information, additional information given to you. Moving along to the next adjustment number 3. It says trading stock sold each month is replenished in the same month, and then depreciation is expected to be constant every month. So with adjustment number 4, remember that depreciation is a cashless expense, and therefore we will not be recording it into our cash budget. Number 5, they told us that rent income is subject to an increase of 20% with effect from the 1st of June. So there's going to be an increase in the rent from the 1st of June. Now remember, your budget period is from, it should be on the top, the budget period is the 3 month from the 1st of March, here's it, the 1st of March 20.8 to the 31st. So have a look. This is your budget period, March, April, May. When does the rent increase? June. We only interested in these 3 months. We do not need to worry about June. As I said there, rent income will remain 15,000 in the budget period for now until the increase comes into effect. Then we have sales, number 6. Sales are expected to remain the same in March but increase by 10% in April. And then thereafter, an increase of 5% per month is expected. So they told us that March sales will remain the same. So if I have a look at my cash sales, in Feb it was 270, and they told me that in March it will remain the same. So I will put 270. Then they said that in April it's expected to increase by 10%. So I got to work out what is 10% of 270, and it is 27,000. I'm going to add that to the existing amount of sales, 270 plus 27,000, and our April sales will be 297,000. And then they said that in May there will be an increase of 5%. So I'm taking the last month's sale of 297,000 and I'm adding the 5% to find out, well, multiplying 5% to find out what is 5% of 297, and it is 14,850. All right. If I add that to 297,000, I should get sales for May worth 311,850. And that you can quickly work out your cash purchases. All right, so moving back to note number 1, where they said the markup is 50% on cost and is going to remain that way for the budgeted period. We can then take the sales amount that we just worked out and work out what was our cost of sales for these particular months. Remember that your formula for cost price is cost price equals your selling price times 100 over 100 plus the markup. In this case, our markup is 50%. As you can see, I've got my values over here. In March, our selling price was 270,000 times 100 over 150, and my cash purchases, well, cost of sales is 180,000. For April, I took the sales amount in April times 100 over 150, and I got a cost price of 198,000. In May, the selling price was 311,850, and I worked out times 100 over 150 to get cost of sales worth 207,900 Rand. Alright, so that takes us to the next adjustment, number 7. A 15% increase in salary takes effect on the 1st of April each year. Now remember, what is our budget period? Our budget period is from March to May. Okay, so here we have our salaries. Where did I get this 56,000 from? I got it from this trial balance given to us. Salaries is number 3, so it is 56,000. So 56,000, it remains the same in March, but then it will increase by 15% in April. Okay, and 15% is worth 8,400, so I'm taking 56,000 and I'm adding the 15% increase of 8,400 to get the salaries for April worth 64,400, and it will remain that way until April next year. So for May, our salary will also be 64,400 Rand. Then we're moving on to the next adjustment. The owner will increase his drawings by 20% from May onwards. So what is my drawings right now? My drawings is cash drawings, it's 4,000 over here. And what did they say? They're going to increase it by 20% from May onwards. So our drawings will remain 4,000 in March, 4,000 in April, but in May there will be an increase of 20%. What is 20% of 4,000? It is 800 Rand. 4,000 plus 800 gives me 4,800. So in May, that will be the cash drawings amount. Then for note 9 in your adjustments, it says sundry and other cash expenses are expected to increase by 5% per month. Now, if I have a look at my sundry and other cash expenses, it is worth 20,000, and each month it will increase by 20%. So in March, it's 20,000 times 5%. 5% of 20,000 is 1,000. So for March, our sundry expenses will be 21,000. In April, you take in March's value, 21,000, and you're multiplying it by 5%. The value of that 5% is now going to be 1,050. And then you're going to add the 21,000 Rand to that in order to get April's value for sundry and other expenses. You'll do the very same for May, 22,050 times 5%. You'll get a value of 1,103 Rand. So the sundry and other cash expenses will be 23,150 Rand. Then adjustment number 10, they said the owner plans to increase the monthly bond repayment by 1,500 with effect from the 1st of April 20.8. So for now, the bond repayment is 14,800. 14,800 Rand, and then it will increase by 1,500 with effect from the 1st of April. So from the 1st of April, the month of April, I'm adding the 1,500. So my bond repayment now will be 16,300, and it will be the very same for May. Then we are moving on to the adjustment number 11. Tulani stores will buy new equipment for 15,000 cash on the 20th of May. So in your cash budget under payments, you'll have new equipment, and 15,000 will only reflect in the month of May. And then they say that we have a favorable bank balance, opening balance of 6,800 Rand. Now remember, at this point you will have A, which is your receipts, okay, and then B, which is your payments. If you take the receipts and subtract your payments, you will either get a surplus or a deficit. Once you get that, you will have your opening bank balance, which will be that 6,800 Rand. Okay, so basically if you got a surplus over there, you will add the 6,800, or if you had a deficit, you will add the 6,800, because it's a favorable bank balance, which will then give you your closing bank balance, and that will be the opening balance of the next month. In this case, it will be for May. Okay, so we are moving on to task 10.6. They have given us the information extracted from December 20.8 and the additional information. What is required of us? We work in the cash budget for the 3-month period from January to March, and then we need to answer the following questions based on the cash budget drawn up. Okay, so let's get this going. The existing markup percentage on cost will be maintained during the year. So please note that they do not give you the markup. You, however, have to work markup out. Stock purchases are for cash only. Trading stock sold each month is replenished in the same month. Sales are expected to decrease by 10% in January 20.9. Thereafter, an increase of 5% per month is expected. All right, so let us work that out. So adjustment number 4. Where am I getting the 240,000 from? I'm getting it from the December sales of last year, 20.8, 240. And they told us that it will be increasing. Well, sales are expected to decrease by 10% in January, and then after January, which means Feb and March, they will increase by 5%. So let's have a look. 240 times 10%, we get a value of 24,000. So obviously it's decreasing, so you are subtracting the 24,000 from that amount, which will give you sales for January, which amounts to 216,000. For February, you're taking the sale amount from January, 216, and you multiplying it by 5%. 5% of 216 will give you 10,800. And that was obviously increased. So you're adding the 10,800 to 216,000 to give you a value of 226,800. For the month of March, you are taking the February sales amount and you multiplying by 5%, and you obviously going to add that to the 226,800 to give you the value of 238,140. So with that, immediately I can work out my cash purchases. But because they did not give me the markup, I have to work out the markup myself. All right. And how do I do that, you ask? They've given me sales and gross profit. Now remember, how do you get gross profit? It is your sales minus cost of sales to give you your gross profit. Correct. So the difference will be your cost of sales. So if I take 240 and I subtract 80,000, I get cost of sales worth 160,000 Rand. What is my markup formula? It's my selling price minus my cost price over cost price times 100. If I take my selling price of 240, I'm subtracting the cost of sales of 160, dividing that by 160 times 100. Simplifying that for you, 80,000 divided by 160 times 100, our markup is 50%. All right, now that we have our markup, we can work out our cost of sales, basically your cash purchases. All right, so you take in the cash sales of January, which we just worked out previously, times 100 over 150 to get the cost of sales of 144,000. February, you take in February sales times 100 over 150 and you get 151,200 for your cost of sales. March, you take in the March sales times 100 over 150 to get the value of 158,760. All right. Then we have our salaries. What do they say about salaries? A 12% increase in salaries takes effect on the 1st of January each year. Okay, so let's go and work that out. So I'm looking at salaries, which is 31,000 in our information over here. Salaries 31,000. Taking that 31,000 and I'm going to multiply it by the 12% because the increase is from January, and remember our budgeted period is from January to March. So 31,000 times 12%, there's an increase of 3,720. I'm going to add that to the 31,000 to get an increase total worth 34,720. And it will remain constant until January next year. As they said, they only increase salaries in January. Your next adjustment, Ahmed's corner, no, it's number 7. Am I right? No, number 6. The owner takes 4,000's worth of stock for home use every month. The rest he takes in cash. So here's the drawings amount. All right, remember the cash budget is only interested in cash. All right, it's got nothing to do with the owner taking stock. They want to know how much drawings in cash has the owner taken. So we will go over here. He takes 9,000 worth of drawings. Of that 9,000, 4,000 Rand is basically the trading stock. I want to know what is the cash amount that he takes every month, and that is 5,000. That you will put under drawings, under payments. Then sundry and other cash transactions. I expect it to increase by 3% per month. So here's sundry and other cash transactions. That's 5,600. Every month it will increase by 3%. So in January, I take the balance times 3%. It's 168. I'm adding that to get the new sundry and other cash expenses. Then I'll take the January balance multiplied by 3% to get the new increase. If I add that together, I should get a value of 5,941. I'll take the balance of Feb to work out the March sundry and other cash expenses. 5,941 times 3%, the value is 178. Adding that, the sundry and other cash expenses will equal 6,119 in the month of March. Then they said a new vehicle will be purchased in February 20.9 for 85,000. A deposit of 15,000 will be paid in Feb. The rest will be paid in monthly installments of 5,000 starting from the 1st of March. So with that being said, the total of this vehicle is worth 85,000. But you did not pay the full amount of this 85,000 yet. They told us that they are going to be paying this installment from March, which is 5,000. So your installment, under payments, you'll have installment 5,000 only in March. However, you did pay the deposit of 15,000 Rand in Feb. It will be on separate lines. That will be in its own line, and the installment will be in its own line as well. I just want to take your attention back to adjustment number 8. They said that Ahmed's Corner Store has an arrangement with another dealer whereby he sells certain products on behalf of this dealer. For this, he receives commission. This arrangement falls away with effect from the 1st of January. So that would have been recorded as commission income, but now it has fallen away with effect from January. Again, your budget period is January, February, and March. So there will be no more commission. Depreciation again is a cashless expense. The cash budget is always got to do with your cash receipts and cash payments. Alright, so number 11, that was plain and simple. They said that an unused section of the shop will be let out to a temporary tenant for 1 month only on the 1st of February, and the rental is 800 Rand. So we never rented it out in January, and we're not renting it out in March. We are, however, renting this out in the month of February. So in the February column, you're going to have rent income, and it's going to be 800 for 1 month. And we had a favorable opening balance.